Hey everyone, welcome back to my channel. Today I wanted to talk to everyone about how you can save some money on your student loans. So if you haven't heard, there's this thing that is called the CARES Act. As I've been speaking to different people about what the CARES Act means for student loans, I realize that there are a lot of people who probably don't understand that this is a prime opportunity to help yourself save some money over the course of the life of your student loans. Just these next couple of months are really instrumental in helping you save quite a bit of money over the long term. So I wanted to let you know how you could do that. So in essence, through the end of this year, 2020, your student loans of a certain type, right? Most types, but you should confirm if this applies to your type of student loans. But for the most part, student loans are in what's called forbearance, right? And so forbearance means that you do not have to make any student loan payments, and during the time that your loans are in forbearance, you will not accrue any interest on those payments. So it's essentially like hitting the pause button on your student loans, which means that if you don't make any payments, you're not going to have any extra penalty because of that. And when the end of September rolls around and loans go back into, go out of forbearance and things go back to normal for student debt, then you kind of just pick up where you left off, right? And the reason that the government did that was to give people an opportunity to kind of take a breather from paying their student debt if they were falling on hard financial times and they kind of didn't have that much money, and it was like, am I going to pay my rent, pay my groceries, or pay my student debt? So the government was like, we don't want you to have to worry about where you're putting this dollar or that dollar to if you're pinching pennies. So for now, you don't have to worry about your student debt. However, if you are in a position where you can still be paying at least some amount toward your student debt, then you can save yourself some money in the long run over the life of your student loans if you choose to do that. And I'm going to explain to you why. So if right now your student debt is not accruing interest, then what's happening is that every dollar that you pay toward your student debt is going directly toward the principal. And usually when your account is not in forbearance, that is not the case. Usually it could be like 50%, sometimes 100%, depending on how much your student debt is and how high your payments are in relation to that. A huge chunk of your payments can be going toward interest alone, just the interest that accrued in the last month since your last payment. And then a tiny little sliver is going toward the principal, which means that you might log into your account every month and see that your student debt has not actually gone down very much since the last time you made a payment, even though you made a really hefty payment. And it could feel like you're really chipping away and making the tiniest little bit of a dent, if any dent at all, and it can be very discouraging. And because of that, the interest just continues to accrue month to month, and you're only ever paying interest, especially in the beginning of the life of this loan, especially if you have a really long-term repayment plan. And so it's kind of like a black hole that just sucks up all your money, and you really feel like you're making zero headway. However, now, because your loans are in forbearance, $0 that you pay every month will go toward the interest, which means all of the dollars that you pay every month will go toward the principal, and you will start to see that principal come down more quickly than it would on average in any other month. And on top of that, because interest compounds over time, you're actually going to save yourself dollars in the future as well. Let's say I was paying $1,800 a month, okay? Let's say before, about half of that went toward my interest alone, which means that only about like $900 of my payments were going toward the principal. Whereas now, if I were to pay $1,800 a month, a full $1,800 of that goes toward the principal, which means that that extra $900 that would have gone to interest instead is paying down part of the principal, and that piece of the principal that it paid down, it disappears. So what happens is in the next month, there's no interest accruing on that because it's gone. Whereas if that money had just gone to interest, then that principal still would have been there, and in the next month, it still would have generated interest on that piece of the principal, So the more you can take the principal down, the less your interest will be month to month over the life of this loan. So for every dollar that you pay toward principal now that you wouldn't have otherwise been able to pay, you're actually saving yourself interest over the life of the loan. So if you, let's say, had $100,000 in debt, and then you were choosing not to repay anything over the forbearance period, you would still have $100,000 in debt, and you would start to accrue interest month to month from October and beyond on that $100,000, and you'd be in the exact same position that you were in, except that everything will have been pushed 6 months, so you're actually going to end up paying things off 6 months later. But if you choose to make some payment during this period of time, let's say you've paid $5,000, you're at $95,000, you've paid $5,000 off completely interest-free, where you would have been charged interest on that $5,000 had you left it in there and it just sat there, or would have hit you with an interest charge. And then whatever portion was left on that $5,000 after that, there would have been another interest charge every month thereafter until you'd eventually have paid off that $5,000. And it would have taken you a lot longer to do so because you'd be paying the interest down simultaneously. So if you make some payments now, you're actually saving yourself all of the interest that would have accrued over the life of the loan that it would have taken you otherwise to pay off that $5,000, which would have been twice as long because you would have been paying interest at the exact same time. So your money would have only gone half as far. So it's actually really beneficial right now to be paying down at least some portion of your student debt. And so what I've chosen to do is to kind of strike a happy medium, right? Like, you could continue to pay your full-time loan payments that you were paying before, and if you're in the financial position to do so, that's amazing, and you should totally do that. If you are not in the financial position to be paying anything on your student loans, then you shouldn't. You should really take advantage of the forbearance because that's what it's there for, right? But if you're like me and you're a little bit risk averse and you want to be able to save some money for a rainy day because times are a little bit more uncertain right now and it's good to just kind of have a little bit extra saved aside, then you can do that. But you should still apply some portion of what you would have to your student debt. So what I personally decided to do was to strike a happy medium. So I was paying about $1,800 a month in student loans. Usually, some months were different, but let's just, for clean round numbers, I was paying $1,800 a month in student loans. Of that, about $700 went to my interest alone. Now, because I was in a period where I wasn't paying interest anymore, I decided that I was going to take the $1,800 minus the $700 that I was typically paying in interest every month and just have a remaining $1,100 that I paid every month in forbearance toward my student loans, so that at minimum I still was on track to pay off my loans at the same time I was going to, because I wasn't pushing things. So I stay on the timeline that I wanted to stay on, and on top of that, that's $100 that I'm getting a chance to pay off interest free. And over the life of the rest of my loan, that won't have sat there and accrued more interest month to month, or made it more difficult for me to pay down because every dollar I was spending was not going toward the principal, right? So I actually end up having a chance to kind of kick that out of the way really quick, and then all of that money that I would have paid in interest during that period if it wasn't in forbearance, I get to put that money aside in savings instead of it just vanishing into the black hole of nothingness that is interest payments, right? So now I get to have an extra $700 a month in savings while still paying off everything on the same timeline I was going to pay it. And I also get to make sure that when interest starts to accrue again, my principal is lower than what it would have been had I just left everything as it was. And it's not just hitting the pause button, but when it hits the play button, things are actually in better shape than what they were when the pause of forbearance fell. So I'm actually getting to get a jump start on my student loans, and I will have saved myself interest over the life of the loan. Even months down the line, saving myself dollars in interest. Those savings will compound month to month over time because I'll be able to chip away at other parts of the principal that, but for this forbearance period, I would not have the opportunity to have paid off even as quickly as I got to that amount. So it's actually really, really beneficial for you to pay at least something, whatever you can pay, at this time towards your student loans, and you will find that it ends up costing you a lot less. It ends up saving you more than what you're actually spending during this time. It saves you over the life of your loan than if you were to leave it there and wait to pay it off later. Because you could probably imagine that any dollar that you have in your principal that is accruing interest while you're paying, it's as if you're paying at least like $1.50 back when you're paying it back. So anything that you can pay now dollar for dollar, that you have the ability to do so, you should take advantage of that opportunity and do that. So that's my little tip and trick on how to make sure that you're getting the most out of this forbearance period, whether it's that you're falling on financial hard times and you really need to get a break from that debt for a little while because you really just can't take it right now. But if you are in the financial position to take advantage of the forbearance in a positive way, where you can pay off your debt more quickly and you can pay dollar for dollar toward the principal without worrying about interest, kind of get a little bit of that windfall right now, then you should be taking advantage of that, and it is a prime opportunity to do so. Even if it means you get to still put a little bit aside in savings like I'm doing and kind of striking a happy medium. So I hope this helps. Let me know if you enjoyed it. If you would like to hear more tips and tricks on student loans, or just more thoughts I have on student loans in general, and how to make sure you're kind of handling those the right way, please give me a thumbs up. Please leave some comments down below to let me know that you enjoyed this video or that you'd like to hear some more videos of this nature in the future from me. But yeah, in general, please hit the thumbs up, please subscribe. It helps my channel so much. Really appreciate it. Thank you guys so much for watching.